I think gold will certainly go to a couple $1,000s over the next decade. I mean, that's not a very radical assumption. That's only 4, 5, 6% a year that would have to go up. So I'm sure gold will be a great stock, a great investment over the next decade.
Now, let me get to equities now.
I do not.
Do you own any stocks? Would you put any money in the U.S. market right now?
No, I mean, the U.S. market's up 70% in the last 8 or 10 months. No, I don't like to buy anything like that. I'm skeptical of the economy going forward, and if the world economy gets better, commodities are going to be a great place because there are shortages developing. Maria, if the world economy doesn't get better, they're printing a lot of money. That's always good for real assets, and if the world economy doesn't get better, they're going to print a lot more money. So commodity, real assets are the place to be. Do
you think we're seeing a bubble in some of these emerging markets? I mean, I know, you're living in Singapore, you are traveling all around, and you have seen the Asia growth story on the ground, and it is really alive. But people say, you know what, too much money has moved into these emerging markets, and it's a bubble. What do you think?
I sold all of my emerging markets 2 years ago, except China, but then they went down. They've come back up, but it's not a bubble yet. I mean, the Chinese economy is 1/10 the size of Europe and Asia. That's not a bubble. There'll be a bubble in China. There'll be bubbles in Brazil and other places, but not at the moment.
Where do you think is the most important place to avoid right now? I mean, is it the stock market? Or is it
States bond market.
U.S.
The long-term government bond market. That's the next bubble. Why? I mean, would you lend money to the United States government for 30 years at 4% or 5% in U.S. dollars? Oh, Maria.
This is such a great way and such a simple way to put it, Jim.
Well, I mean, who would? But they're down there.
So you think that the U.S. bond market is a bubble?
Not yet, but it's going to be. That's the next bubble that I see forming in the world, because they're down there driving up bonds as fast as they can. They're buying them themselves. Yeah. That's not good for you, for me, or anybody watching this show.
Are you more worried about inflation or deflation?
Inflation. Well, no, we're going to have inflation. I mean, throughout history, when people have printed huge amounts of money, it's led to rising prices. Plus, Maria, in the commodities markets, we have shortages developing. Food is the lowest inventory in decades. You cannot get loans to open mines. I mean, we're having great shortages developing in commodities. Shortages combined with printing money is going to lead to more inflation.
Meanwhile, a lot of people feel that the biggest risk for the stock market, because a lot of the things that you're saying obviously make a lot of sense, and yet this market keeps going up. So it is defying some of the obvious things that seem, or at least seem obvious. So people feel that the biggest risk for the market, the stock market in the U.S., is the Fed coming in. When would you expect Bernanke and companies to start raising rates?
Oh, the market will raise rates before Mr. Bernanke. Mr. Bernanke's not smart enough to anticipate. He will follow the market. Just watch CNBC. You'll see when the rates start to go higher. Or watch the currency markets, because you'll start seeing turmoil in the currency markets, and then rates will go higher on their own.
And you think that's a 2010 affair?
Oh, I know we're going to have more currency problems in 2010. We're certainly going to have at least a semi-crisis, but it's already starting, as we said, Vietnam and all these other countries. No, we're going to have serious problems in many countries and in currencies.
What are the implications that our viewers will see of some of these debt worries around the world?
You're going to start seeing, first, if I'm right, you're going to see the dollar rally for a while, which would be a good chance for some of your viewers to maybe buy some of the currency ETFs which trade here on the stock exchange, or buy some commodities. There may be better opportunities. If we start having turmoil, which I expect, the dollar's going to rally for a while, because everybody will have to cover their shorts. Everybody's short the dollar right now. So they'll be forced to cover their shorts. The dollar will go up. Then you can put your money into other foreign currencies.
And one thing we didn't mention was Europe. The U.S. and Britain, not untouched, obviously. Britain is trying to keep their top AAA credit rating. What do you think about Europe? Is it
the UK is not going to keep its AAA rating. I don't know why it has one still. They're already worried about the U.S. They certainly should be worried about the UK. No, I mean, the Prime Minister there has been ruining things. It's going to be a very, very bad situation. I own no sterling. I used to own sterling. I've owned sterling for 30 or 40 years or something. I own no sterling now. I mean, it grieves me to see what's happening in the UK.
That was Jim Rogers in conversation with CNBC's Maria Bartiromo. Time for a quick break on Your World at 10. Up next on the National